Good morning, everyone. Keith Johnson, CPA here with your Business Beat for Wednesday, June 16th, 2021. Today is an important day as far as the short-term economic future of the country. Of course, I mentioned on Monday we have the Fed meeting, which started yesterday. It will wrap up today around 2 o'clock, as is the normal case. Fed usually comes out with its report. The base report, or the base action, which is the adjusting of the Fed funds rate, and which is the interest rate banks charge each other, and the Fed charges the banks, is expected to remain near zero. However, it's not so much what they do, it's what they say they're going to do in this case. So what we're talking about here is what the Fed will usually say is, okay, we've decided to, and I'm paraphrasing here, to leave interest rates steady for the time being. However, we do see, this is what they might say, we do see inflationary pressures above our tolerable rate of, which is usually about 2 to 2.5%, and therefore we may see the need to tighten interest rates, i.e., raise interest rates in the near future. So what's happening is that this afternoon the Fed will come out. Interest rates will stay the same at zero, essentially. But the key is looking for the language and what their intentions are in the next 3 to 6 months. And now what markets are pricing in, and they're kind of expecting, is that the Fed is going to start tapering off the quantitative easing, which is the $120 billion of injection of liquidity into the economy every month. They're looking that they may start doing it, or they may start doing it before the end of the summer. Like I said, I don't see interest rates going up now, but there very well could be some wording in their report that hiking the interest rates in the next 3 to 6 months may be possible. So stocks are the market's they're going to trade a narrow range until this afternoon, and then when the Fed announcement comes out. What do I think? I think with the producer price index coming in this week at a yearly average gain of 6%, which is the highest since, I believe, 1978. I do see the Fed to maybe not raise interest rates, but I do expect them to put in language saying that the party is going to be coming over to an end pretty soon as far as Wall Street goes. So I do see some indications there. Oil prices still high. However, some interesting news on that front came down yesterday. A federal judge, at least for the time being, blocked the Biden administration's revocation or pausing of drilling on federal lands. Basically, what had happened was you have the oil companies, and they had contracted in the past, and which administration, we don't know. I mean, this can go back decades, but they contracted, with the federal government to drill responsibly on land owned by the federal government or leased by the federal government. Hey, during the Trump administration, there was no problem. Oil companies and shale producers were allowed to drill, and that's fine. When Biden administration came in, predictably, they put a stop to that. They put a pause. It was last month. Well, the price of oil has gone up significantly because we're at that balance where it's now profitable for the shale companies to come in and ramp up production. They haven't been able to, so prices kept going up. They took it to court, and the judge at least found, at least for the time being, that drilling on federal lands can resume. How now? It's going to play out in Congress or in the courts for years. I mean, forever. And it's just going to be based on whatever administration's in office. So, I mean, it could change tomorrow, but at least for the time being, do look for, barring a sudden ruling from another court, we do expect to see oil production start to ramp up, and I could see some relief at the pump, maybe starting around the 4th of July. So if you're planning a road trip around the 4th of July, you may be in good shape. So we'll just have to wait and see. No news, at least from what I was reading regarding the IRS and their leak. I do think mainstream media has kind of quashed it for now, but I don't know. What my feeling on it is that I wasn't a fan of it because I'll be honest, as I've said before, we practitioners work with the IRS to work with our compliance. We're for compliance with our clients. We're a go-between. So we rely on the IRS to be, well funded so that we can access the right information and talk to the right people. And if we're having problems doing that because they're underfunded, then that's a problem for our clients. So I wasn't a big fan of that. So, we'll see if that news story does pick up speed. But as of right now, I think everything's going to be focused on the Fed report. Tomorrow is the weekly jobless figures. Last week, they were around 375,000. I could see that starting to, I see it continuing to its drop as more and more states get rid of the unemployment. We are seeing a lot more people rage quitting their jobs, which is quitting your job without a backup. My career, there have been a few jobs where I've left, but I didn't leave until I had a backup. Waking up nauseous in the morning is no fun, and that's been my gauge. Not now. I love what I do, but in the past, going back 20 years, I know that it was time to leave a job when I would wake up in the morning and it was like, I couldn't, I would feel sick. So, but I always had a backup plan. I always, I didn't quit a job until I had something else lined up. So this is a disturbing trend. It's something that's going to continue to play out. Now, I did notice here in Jacksonville, one local gas station chain has reopened 24 hours. So that's a good sign. They were closed 11 to 5, 11 a.m. to 5 11 p.m. to 5 a.m. So it's good to see that they're fully staffed, at least on the overnight, because you never know, when people need them at 2 in the morning, because Lord knows I've done that on the way to airport for 5:30 a.m. flights. So nothing else really stuck out. But like I said, I do expect the Fed to at least start working in some language saying that leading to actions that will reduce inflation, i.e., reducing the money supply over the short to medium term, as well as possible interest rate hikes before the end of the year. But we'll see. So anyway, in the meantime, take care. Have a good day, And if you have any questions, please give us a call. But as always, be safe, and we will see you tomorrow.